All right. So everybody today, first and foremost, just a big thank you for going ahead and taking the time to hop on this morning. Got a lot of great responses last week with the feedback from some of the stuff we talked about with social media. Also, just a couple of weeks ago, got some great responses about the ones where we talked about using our technology. So for any of you that didn't get those, be sure to just fire us an email for the RGX coaches. They'll be sitting in the in your Lightspeed VT training system. Javier, good to see you, sir. Okay, so today we are going to talk about the main reasons why I see golf coaches not making the income that they desire and don't hit their financial goals. And so what we're going to do here is, I'm just going to admit these people in, just going to make sure everybody's on mute. Is everyone hearing everything okay? I get a little bit of, there we go. All right, perfect. So I'm going to dive right into this. And my biggest suggestion to all of you is please have a notepad, have an iPad, have a paper and pencil, have your whatever you use to take notes. And remember, the goal behind this is don't just take notes and then go and actually apply them. That is the most important thing that I want you to get away from today. Your time is extremely important, right? It's the most valuable asset you have. And if all we're doing is listening to this fantastic English accent, that's great. But guess what? It doesn't make you extra money unless you actually go and implement what we talk about. So here's what I want to talk about first is, let's look at the positive side of this. How do we define your desired income, right? How do we actually hit the correct number? Now, having done this for quite some time, there seems to be this whole concept of the six-figure coach being like the proof that you've done a great job, right? I've made $100,000 coaching or instructing or teaching, however you want to put it, okay? And so often what I hear is that's the number. Everyone says to me, right, hey, Will, I want to make $100,000 a year. So where that comes from, I think, is they get motivated. It's January. This is going to be a great year. They're positive. It's going to be a better year. And they say, look, it's 100K. Now, for some of you, maybe at 100, so you're saying 200 or 300 or 400, whatever the number might be. But here's what I want to challenge you to. One of the biggest problems that I see is that when a coach is going about actually trying to decide how much money they want to make, they miss out really the whole purpose behind it, the actual why. And we've all heard from Simon Sinek how important the why is, but really this isn't diving any much deeper than money is used to do things, right? To pay a mortgage, pay for school, buy food, drive a car, right? The first thing that I want to challenge you to today is on the piece of paper, and you're welcome to put it in the chat box. I love seeing the information coming in, is what is your goal for this year? That's just the first thing I'd ask you, okay? So is it 100, is it 50? Now, some of you might be like, Will, I'm a general manager, I'm full-time, I'm just looking to make an extra 10 grand. Fantastic, put 10K in there. But again, what I see with coaches who are really trying to become full-time, it's always this $100,000 mark. So here are the three things that I think are just counterintuitive when it comes to putting that number down, okay? The first thing is why. Prove to me why you have to make $100,000 a year. And I'm not talking about motivationally, like how inspired you are to make $100,000. I'm saying, give me your budget. How much is your rent or your mortgage? How much do you pay for insurance? How much do you pay for your car? How much do you need for groceries? What goes into your 401k? What goes in, all these things. Like, just put together a basic budget for yourself. So in the chat box, I would love to hear from Jay Davis, 401k. You could do an IRA then, Jay, you know what I mean? So what I want you to do is just put in there, honestly, and again, please understand when I say this, it's not like, well, Will's got it all figured out and I've got this all together. It's, sometimes I forget to do the basics, right? And then you stumble and you go, why am I doing all of this? So again, at the beginning of every year, I strongly suggest you go in and make a budget. So who has a budget for themselves that they know every month I must make this much money? So just go in there in the box and just fire it in there. Yes or no, thumbs up. I won't judge you because trust me, there's a long time that I started my business, had no idea how much money I actually need to make. So the first thing I'm going to challenge you to do is ask yourself why. Why do you need it? Okay. Now prove it to yourself. Go through that list and show it to a spouse, show it to a friend, and make sure that you're actually not missing stuff. Things like your retirement fund, things like the cost to upkeep the house, Things like going on vacation, buying clothes. I mean, so often we'll do a budget and be like, oh, I could get my budget down to $3,000 a month, but I forgot food. You know what I mean? And we actually forget like these basics because it's our mind. Yeah, Chad, I love it. My wife told me I had to. Good. You have an outstanding wife right there. Your spouse can be your greatest asset here because they bring reality into our sometimes bubble. So once you've proven that and you've actually gone ahead, oh, hold on, stop sharing. Why is it doing that? You guys can all see my screen, right? I don't know what's going on here. Sorry. I'm not sure why it's telling me that I need to do that. Everyone can see my screen, correct? So as you go through, I want you to double check this, right? And so I want you to go ahead and really look into the concept of, are you including everything? And this is personal. This is personal budget. And we're going to talk about this on the next slide about business versus personal, right? But I want you to go ahead and write out why you need that much, okay? What the budget needs to be, and then where's the breathing room? What happens if the car breaks down? What happens if, you have to take 2 or 3 weeks off of work? Do you have a security fund, a safety fund, a rainy day fund, whatever it may be? So this is the first reason why I think people struggle is they just throw a number out there. They made $35,000 last year. So then they say, I'm going to make 100 this year. Is it really realistic to triple your income in 1 year? I've seen it done, but it's not the standard. But if you have to make $100,000 to keep your house, if you have to make $100,000 to get out of debt, pay the tax man, whatever it is, you'll definitely find a way more than it would be nice to make $100,000. So as we start to look at this, here's where the problem now comes in. Remember, we picked a number, arbitrarily just picked it. So there's not much motivation or purpose or reason why. And then the second key here is that most golf professionals, for me, definitely, I didn't understand this whole concept between gross and net. Okay. And what my team of advisors used to say to me, this is years ago, they said to me, Will, I'd say, I did 400,000 this year. I made 400,000. That's the word I used, was made. And they're like, no, Will, you grossed 400,000. That's what you grossed. That's not what you netted. And one of my mentors would say to me, Will, revenue is vanity, profit is sanity. And so this idea of starting to understand the difference, and this is, again, I'm not a CPA and I don't work for the IRS, and I'm just going to take you through some basic accounting that once you understand this, you start to realize why you might even hit the number you desired and still feel broke, still feel like you don't have enough money to pay for the things that you need. So let's go through Accounting 101. And I will tell you that I think I failed accounting in college, but you know what? I learned lessons the hard way by actually having to lose money rather than actually figure it out right away. So let's just go ahead and say that we get our number of $100,000. This is our revenue goal for the year, okay? So we get to the 100. So that's gross revenue. The second thing that we've got to look at here is we need to start to understand what cost of goods sold is. So this is a direct cost related to your business. Like, to do this lesson, I had to pay for range balls or a green fee or a percentage to the golf course. So that if you didn't teach the lesson, that wouldn't be charged. If you did, you're going to get charged. So the concept here is, a lot of coaches will tell me I'm 10% or 20% or 30%, whatever the number is. I want you to just go ahead and put your gross revenue. Let's just say your goal is, I saw here, £40,000 this year. Great. So it's 40,000. What do you owe to the golf course? Now, what that then gives you is an understanding of gross profit. Now, again, for many of you as head professionals, you know this because you do so much stuff in the pro shop. I see Wayne and Jay and some of the guys, right? You guys understand this concept of, now I've got gross profit, right? So this is how much I've got to work with. As we go from there, we're now down to 90,000. What happens now is we have business expenses. So unfortunately now we actually have to pay for the cell phone, and we have to pay for, our PGA dues, and we need to pay for our car back and forward. So this is great because they're write-offs, right? It's a real positive, right? So we get to go through that process of writing it off, but at the same time, it's not money in my pocket. So this is one of the key things that I think most people don't understand, at least I didn't, was making myself an employee of my company. And I don't mean that you have to set up a corporation and become an employee, but I need you to think of it in terms of you are separate from the business. So many people just see themselves as the business, and this is why they struggle to scale, but also why they struggle to save. Because they don't put away 10% of their revenue each year for the business in terms of, hey, next year, if my flight scope breaks down or I need to get retrained in TrackMan, that money isn't going to come out of my income. It's going to come out of the business's income. And so this is where I would suggest to all of you have 10% of your income saved for the business in a business savings account so that you know those costs are coming. Like, let's just go ahead and say that the pro shop starts charging you for range balls and it's more money. That's already built into your business. The following year, obviously, you can change change your pricing, etc. But these are the things that are going to come in as we look at expenses. So now what you've got is basically your net profit, what the company actually made, and that's really going to be taxable income for you. So now we're down to 70%, 70,000. So the next step here is obviously, unfortunately, we have to pay taxes. And I put the star here because I live in California. So I said, pay to the IRS 20%. That doesn't happen in California, but let's just go ahead and say we're all lucky enough not, well, we're happy to live in California, but it's more like 30 to 35% that you pay. But let's just say there's 20%. Well, now you're giving $14,000 to the government, which leaves us with your take home of $56,000. Now, what I've seen pros do, maybe you've done it yourself, is you've said, wow, at $100,000, I'm going to have $8,333 a month. And that's just that quick thought, right? It's like, that's how much I'm going to be making. But if we look at this, we're actually making almost half of that because of all these things that we have to go through, right? So we're really taking home $4,666 a month, not $8,333. So my challenge here is to each of you is to honestly ask yourself, are you talking gross or net when you're looking at your numbers? Because if you now build out your financial plan thinking I need a $100,000 take home, you're only getting $56,000. All your programming and all your pricing and all your time is based on the wrong number. And for many of you who are on with RGX, we go through this process of like figuring out your capacity. How many people can you teach at what price? If you put the wrong number in there, you have a serious problem that you hit your goal and you're still broke because you're realistically $44,000 short of your desired $100,000 gross versus take home. So this is that second key thing that I would have each of you look at and really start to comprehend as a big reason why we struggle. The third thing that we're going to go into here today, so I'm just having to move these things around, is understanding the difference between billable hours versus running a business. So remember, most of us pick a goal for no specific reason apart from it sounds good because of 100,000. We then pick it thinking net, but it's actually gross, and we don't understand the cost of doing business and the cost of goods sold and taxes and what we really get from take home. And I think this is an advantage sometimes when you're an employee at a club, is you teach a lesson, it just gets put onto the top of your paycheck and you see, oh, wow, that was good. Now you see your taxes as big, but you go, wow, I made an extra $800 this week. If you're an entrepreneur and you own your own business, you don't have that withholding. And that's why you have to be so accountable to the end of the year, whether you're doing quarterlies and all those deals about paying taxes, is that we get sometimes hit with that shock of, I'm not making as much money as I thought. And that comes to this third part. And that's to do with this concept that I hear people say, Will, I make $100 an hour. Now, let's all write this down. I charge $100 an hour. Everyone say it together, write it down. I charge $100 an hour. You don't make $100 an hour, because I'll prove you this. If you made $100 an hour, you would make $200,000 a year, because it's 2,000 hours in a work year, right? Times it by 100, it's 200,000. So what I want you to do now is just get honest with yourself. And I want you to go through this process of, first of all, write down how much you are going to file for taxes in 2020. Right? So this year, when you write out your taxes, how much do you make? So maybe it was 33,000. Maybe it was 52. Now divide it by 2,000. That's how much you actually make. Okay. And for a lot of coaches, you work way more than 2,000 hours, unfortunately. So it might even be worse off. And what I found is that most coaches that I work with, it doesn't matter what country you're in, and I don't care how much you charge, whether it's $40 an hour or if it's $250 an hour, you will be making around about 40% of what you charge when you actually look at the investment you put into your company by time, because you did the admin, you did the setup, you did the breakdown, you did the emails, you did everything to do with the company, but you only taught for, let's say, 1,000 hours at $80. You had 80,000, but you worked for 2,000 hours. And inevitably, I always see this thing of, will I make 100? And when we do the math, it comes out to be, no, you're actually making about $39 an hour, $37 an hour. So here's the difference, is we've got to start to take a look at, when we're building this out, is everything has a cost. You sending an email has a cost. You setting up has a cost. You ordering new tools, you going to training, you being on this call, it's your time. And if we want to start to grow a business rather than just build a business around ourselves, we've got to start to put a cost along with what those things are and start to charge the right amount for it. So what I want to show you here is that if we forget this, we're always going to struggle. But I would like you to look at it this way. If you do 1 hour of instruction or coaching, you need to look at it as about 1.5 hours, okay, of expenses that it takes to run the business. Okay, so when you go to a store, let's say, and they give you a cappuccino and it's $6, and you're like, that can't cost $6. No, it doesn't cost $6, but it does cost money to turn the lights on. It costs money to have the waiter deliver it. It costs money to buy the cup. It costs money to produce the coffee, to bring it out to you. And then the company needs to make a profit. And so the idea here is we just sell our time, fill it up as much as possible, and then we do the extra stuff on top of our business. And this is why most golf pros are so burnt out. They're exhausted because they may be successful and coach for 30 hours a week, but then they got 25 hours a week of actually doing the work to run the business. So I challenge you to look at, what can we do to make sure that we're building that cost into what we're charging? Now, I'm going to come down here and just show you this, is that the best way you can do it is to scale your business. You must become an employee. So I want you to start writing down specifically, okay, if I wasn't doing this, what would somebody have to do? Because that assistant would have to show up early. They'd have to put the plan together. They'd have to set up. So that's an hour. Okay, and then they'd have to coach the session. That's an hour and a half. And then they'd have to break down and send some email. So really, you're saying there's 4 hours of time to do that junior coaching program or that PGA Junior League. So what we've got to start to look at now is, what does it actually look like to have 4 hours of time rather than an hour and a half? Once you start to do this, it enables you to scale, because now you're going to realize what it takes and what you have to charge somebody to actually be in that program. This, of course, I have a very skewed view on. This is why group coaching works so well, because it's very difficult to say to someone, hey, I'm $100 an hour, but I need to go ahead and charge you 150 because I've got lots of work to do. Rather than, hey, I'm going to lower your price. I'm going to guarantee you results, but you're going to be in a team of 6, which means that I can put the price at 75 or even 50, and I'm still doubling my hourly, but I'm building the time in. So as you go into building programs this winter and you're putting things together and starting to think about, what am I going to charge? And Javi, I see you're on here, and we'll ask some questions here in a minute, but we were talking about the junior program you were going to do last year, and it's realizing how much effort is going to go into that, not the time that they're getting coached, the time it takes to create that program. I think for any PGA professional, they know that this is biggest with PGA Junior League. Well, there's only 10 hours of coaching. Yes, but it takes you 60 hours to run it. You charge for 10 hours, you're getting 1/6 of what you should make per hour. And this is one of those things that we have to help a lot of coaches with, is go through this process and break down. Yeah, you might be successful, revenue, but as far as profit, it's not successful. It's, to be honest, it's disgraceful, because you're at maybe a $15 or a $10 and $9 per hour for the effort that you're pouring into these kids. Yet you're not getting paid for that. And so today I really want to sort of dive in a little bit and just get honest with everybody and ask some questions here of, as we go through this process, I want to see, which one would you say has held you back the most? Is it to start with not having a clear budget? Is it number 2, not understanding the difference between gross versus net? Or number 3, is it to do with you are not actually building the cost of what it takes to run your business into that 1 hour lesson or that coaching program that you're doing. So let's go ahead and see some people put it in the chat box, and then I'll pick on some people who type it in. Number 3. Okay, Craig, give us Craig Donaldson. Oh no, it's Tad. Oh, and yeah, well, both of you. Okay, so Craig and Tad. Tad, give us your thoughts and feedback right now, and then Craig.
Yeah, I mean, mine was 3. So yeah, just not running in the running costs and me having to send all the emails after and uploading the videos and things like that. So I remember I was on one of your calls. This was probably like ages ago now, but yeah, I ended up upping my charge to do that. I wish I'd have just done it earlier.
Great. And how much did you have to increase it by?
I mean, so I was doing £20 a half hour. So I just added on a £5 because then that allowed for me to open up the studio, cut 10 minutes before, because I normally allow quarter of an hour between lessons. So then that eats into the lesson, your hourly rate as well. And then the 10 minutes, quarter of an hour after, booking them in again, and then sending the emails in. So that ended up. So I just worked out now whilst you were chatting there. So I charged £25 a half hour, and I was doing all but I actually only earn about £10 an hour. So after I've knocked off all my, because probably about once a week, I used to have to do the whole day of doing emails, but I would never charge for it. So now I've upped it, and I've finally started charging for it.
Way to go. It's the work that you're doing, right? And truthfully, if you asked your student and you said to them, look, would you like me to send you a video review? Would you like me to send you an email? If you have questions, would you like to reach out to me? They'd be like, yeah, that's great. Oh, that's why I'm £25 an hour, not 20. If you just half a lesson, I can do it for they'd be like, no, I want that.
They want the added extra. And
absolutely. Yeah, providing value. Exactly. Craig Donaldson, what about for you? Number 3.
Yeah, hi guys. Yeah, I'm exactly the same. You just try to please the customer too much, and you actually don't factor in, like you say, your own costs. So, like you say, you just try to be a good person, and unfortunately, it hits you, like you say, with the billable hours, and you just don't make any profit. It's just watching this now, I can clearly see it in my head that you just don't factor in for that time when you're not actually in front of the student.
Yeah.
So yeah, this is completely just opened my eyes. So I've got to say thank you for that. It's unbelievable.
Brilliant. So what I would challenge you all to do now is start to get honest with yourselves, right? About what is the extra stuff that you're doing. And if you're like, I'm done at the end of the lesson, I have nothing, then this is an opportunity to upsell people without letting them know. I mean, I don't like to nickel and dime things and be like, would you like me to send you an email? That will be $2. Would you like me? It's just understand what it takes to get a result, right? Understand what your students actually need, and then just provide it to them. Now, when they then say to you, oh, wow, you're £30 an hour now, Tad. Yeah, well, what I've added on is I've found a lot of, students really like me to actually just do a check-in, just 5 minutes by phone after 3 days afterwards. And I also have a practice plan that I wrote up for you, and it just takes me a little bit of time. That's why I'm £30. They're just like, fantastic. Yeah. That's absolutely brilliant, because you see that you're starting to actually run a business rather than just saying, well, here's my time. I can just do all the admin on my own. Well, how does that work for your spouse? How does that work for your kids? How does that work for you? Your mental and spiritual and physical health? It just doesn't work. So let's see. Is anyone want to guess? Add? Okay, Chad, I like it. You got honest. I don't have the knowledge nor experience to determine an accurate business plan or annual rate. So, Chad, let me pull you up so I can see you on the video. So this is one of the big things I would say here, Chad, is this concept of, and we've gone through, right, the pricing. We've started to understand the pricing, but building that off, like you said, a business plan rather than a quick rash decision on, oh, the locals charge 100, maybe I could charge 120, and then let's do that. And a season later, you realize I could have charged 200, I could have charged 150, who knows? But the concept here again is that so often we are the business, and that's a problem. You cannot scale if you're the business. Even if you never hire anybody, I want you to think of yourself as an employee. So you start to think about, well, I'd be paying an employee to do this. I'd be paying an employee to do that. I'd be paying an employee to do this. So it's a big shift, I would say, Chad, when you're getting paid to do all your admin and your rate's $80 an hour, and you're sitting there having a cup of coffee, sending emails, and you're making $80 an hour. that's probably the biggest shift I would say with the coaches I work at with RGX, is that just their mindset, Chad, when they see I'm getting paid to do this, like, this is awesome, rather than it's been a long day and I really can't be bothered, but I know I have to because I'm a professional and I should do that. And they sit there for half an hour sending emails. And I think this is one of the challenges, is that starting to understand that these are simple fixes if understood, right? Especially this one. Who was struck by the idea of this one? This is, for me, this is the one that got me the most, and does every year, especially living in California, is like, wow, I gross that much, but there's only this much to go around. You know, did anyone take anything from this one? The idea of understanding a basic P&L. Any thoughts, questions from anybody on this one? Chime in. You can welcome to unmute yourself. Nobody? Wow, you guys are all fantastic, because this one's the one that really gets me. Right, I'm going to pick on somebody. Jimmy Estes, you wrote some notes in here. What was your thoughts and feedback of starting to understand the P&L?
Yeah. So every month I go through my bank statement and I look at my expenses, and it's pretty amazing when you start looking at all the things you pay for as a business. You know, every year I write down in a spreadsheet all my expenses, and they keep growing as you expand and so on. So I mean, you know, you got to get a handle on your monthlies. You know, I have a rent I pay $1,000 a month, but then I got a telephone, I got V1 cost, I got TrackMan costs, I got, you know, so, and I rent out my bay. It's not like I'm not doing other things to make some of that back, but still, I mean, there are, you know, the costs are pretty big. I mean, you know, what does it cost for, you know, like if you're handing out instruction, RGX scoring method books, you know, the cost of RGX, which is well worth it. But, you know, so yeah, I mean, my expenses are about $70,000. I mean, I spend, you know, a lot of money, somewhere around $7,000 a month when it's all added up. So
yeah, and this is where
6,000 actually.
This is what's interesting, Jim. What you just said there is this idea that people are like, oh, I haven't put my rates up in 3 years. Maybe I should put my rates up. I think I could increase them by 10%. I'd just love to see if companies like, you know, PG&E and Verizon and so just did that in a while. Let's just give it a shot. No, they know exactly what their expenses are, how expensive. Right. Now for labor, how taxes have changed, how gasoline's changed, how the 5Gs come in, and they're like, yeah, we've got to raise rates by 17% to stay on target. And that's it. Like, it's based on a mathematical equation and science and logic of profit. It's not just, I think I can squeeze a little bit more money out of my student, so I'll go from, you know, $70 to $80. And this isn't rocket science. And this is one of the things I think a lot of people think, well, I'm just not, you know, I'm not good at this. I am horrible at this, everybody. I sucked at this when I got into business. I was no good at it. And I made all the expensive mistakes of making all these problems as I went, rather than actually learning and not having to make the costly errors that I was making. And then you start to learn this stuff and you just spend some time figuring it out. And I think that's the biggest thing, is this is what allows you to sleep at night. You might even make less money, but if you're not spending as much and you're in the red and not, you know, you're in the black and not the red, it's easier to sleep at night. So sometimes when someone says 100,000 and we're able to highlight to them, you only need $68,000 a year to pay all the expenses, all the costs you need. It's like, oh, why am I stressing about 100,000? A lot of times, though, someone will say 100, and after we've done the analysis with them, it's like, you need 137. You know what I mean? And it's like, but it's better to know now. It's better to know now and factor that in. And as we build out that plan for you, like how you're actually going to get there, rather than like, yay, we hit your goal. Oh, we didn't hit your goal. We did, but we had the wrong goal. So everybody, I will be respectful of all of your time. As always, you know me, I could keep going forever, keep telling stories. But I would just say to each and every one of you, if you're in RGX, make sure you're reaching out to us, get on the calls, get set up, get on the next plan that you need to be on. And then for those of you that want to become part of the story, create your story, is please reach out, hop on rgxcoach.com, apply, and let's get on a call together and let's see how we can help you out on your journey. And if not, I will catch you all next week. Make it an amazing week, and we'll talk soon. Thanks.